So China has the world's largest working age population, which we expect will reach nearly 1 billion people in 2013. But the problem is that the proportion of this population as a proportion of the total population is now in decline. And this is largely a result of the government's one-child policy, which has been in place since the late 1970s. And this was introduced in a bid to try and curb the country's population growth. But the problem now is that many people think China is on the edge of a demographic time bomb because its population is also aging very rapidly. So Euromonitor figures forecast that the total population over the age of 65 in China will reach 221 million. And to put this into context, that will account for nearly 30% of the global elderly. So this will obviously accelerate the pressure on the declining labour force. This will have huge implications for the Chinese economy and society as a whole, with our forecast projecting this decline by 2020. So we can expect an inevitable tightening of labour supply. So this will mean labour shortages in the future. Labour shortages will put upward pressure on China's wages. And this is interesting because China's wages have already been increasing, and the wage gap between China and other emerging markets is already narrowing. So if we look at Mexico as an example, the average wage per hour in manufacturing in Mexico in 2012 was $4.70, and this compares to $3.20 in China. So countries such as Mexico, which are much closer to the major North American markets, are in a position to really benefit and increase their global competitiveness and improve their investment potential. The government will be under pressure to try and shift the economic structure towards less labour-intensive industries. So what we might see is a move towards high-tech industries in China. So the government, we know, is very keen on increasing its research and development investment and increasing the number of patents and becoming a real global innovator. But government revenue generally will be under pressure because the declining labour force means fewer people paying taxes. So this will put pressure on government expenditure and public spending generally going forward. The government may be forced to introduce a more formal two-child policy in the future and even look to raising the country's retirement rates, which on a global level are very low. We need to put these numbers into some kind of perspective. So although China's population is declining and we expect it to reach 961 million in 2020, this is still more than the total population of the whole of Europe combined. Countries such as India are in a strategic position within Asia Pacific to really benefit from the weakening demographics in China. So India is currently benefiting from a demographic dividend, which means a high proportion of youth entering the labour market and contributing to economic growth. But again, China has advantages in terms of higher adult literacy rates, higher general skills, and obviously a much better overall infrastructure as well, which is a real problem for India. It could be argued that lots of advanced economies, such as in Western Europe, are in a similar predicament. But the unique difference with China is that it's experiencing these demographic changes at a much faster rate, and also before it has had a chance to get to middle or higher income status. So there's now a really big question mark over the sustainability of China's future economic growth and investment potential going forwards.